Welcome to Copytraders Club, where you can learn how to make more money copy trading. I'm Gavin McCauley, my name and username on eToro. You can continue the conversation on Discord and Facebook. If you like this podcast and want to see it continue, you can do your part by recommending it to one person or group of people this week. Today is a TotaleToro episode with 3 special guests representing different perspectives as we chat about the world of copy trading. Here we go. Episode 31 of Copytraders Club, and let's just get into it. So, welcome to the second in our series of Total eToro episodes, where we sit and huddle with 3 of the finest minds in the world of eToro and chew over 3 issues of the day that maybe don't get a sufficient airing anywhere else. We're going to kick off with a rather fundamental question about the very nature of copy trading itself. Can you beat the market copy trading? And why copy any PI or copy trade at all if you won't beat the market? Next, we will rub our chins, our respective chins, not each other's, over the potentially prickly issue of eToro's promotion of PIs, including editor's choice and PI performance notifications. And the third of the 3 issues of the day we consider is short-termism on eToro. Most copiers seem to want it, if their behavior is anything to go by. So, instead of relentlessly preaching a long-term approach, what if we cut to the quick and consider what options are available for those for whom time is of the essence? Who can they copy? How to find them? So some very juicy subjects there for our panel to sink their teeth into. Speaking of whom, while we may have some semi-regular panelists, it's all changed from the first in the series, as we have 3 different friends of the show here to educate, expound, and entertain. First, joining us for some Belgian waffle is EliteVol, aka Marco Willekens. Hello to you.
Hello to you, Gavin. Thanks a lot for having me again.
A potent Belgian player returns for his second stint at his spiritual home. So it's not easy to come up with a nickname for you. The best I can manage is not really fit for publication, so I'll edit this bit out so the listener doesn't hear me say Marco Volo. And here to represent all copy traders and give us the benefit of his brilliant young mind is the genius that is Bryan Jee from off of YouTube. Bryan, selamat datang.
Hi, kabar baik, Gavin. Nice to meet you, and thanks for having me here.
Fantastic to have you here, and indeed, completing our panel, there's a buzz of excitement as we welcome BeesEliteBJ himself, Steven Budgen. Steven, hello.
Hello, and thank you for inviting me again, Gavin.
Great to have the Singapore sting back among us. Because, you see, it's not sufficiently annoying that PIs already have 2 names. I want them all to have 3. Username, real name, and now Copytraders Club nickname. And so it is to the Singapore sting that we turn for our first topic. Can you beat the market copy trading? And why copy any PI or copy trade at all if you won't beat the market? Steven.
Hi, everyone. So I wanted to touch upon a really interesting subject, which I think will be really relevant to you all as copy traders. And today I want to talk about why I think that copy traders can beat the market overall. So overall, I do think that copy traders can beat the market. But before I talk about the reasons why I think that they can beat the market, I want to talk about the other passive and semi-passive investments that are potentially at their disposal as well. And then we can compare those together. One of the passive investments that an investor could potentially make is an ETF. And an ETF is obviously a group of companies which are overall in an index, and they are tracked by their performance. One of those key ones is the S&P 500, which is a ETF, which is 500 of the US's biggest companies. And actually, since the inception of the S&P 500 in 1926, it's actually averaged 10% gains per year. And actually, in the last 10 years, it's actually averaged over 12%. But obviously, with a ETF, it is extremely passive, right? So you don't have to spend a lot of time with your research decision about the ETF that you select. And then you also don't need to spend a lot of time, tracking the performance and watching it as time goes on. So that is kind of a positive on the passive side of things, but it also does have its disadvantages as well. So one of the disadvantages of an ETF is the fact that it's very difficult to. So, for example, if you invest in the S&P 500, there is no geographical diversification unless you get lots of different ETFs. And again, if you do that, then it's obviously not a passive investment, because then you have to do the different weightings of geographical ETFs. So I think that is one of the disadvantages. Also, there could be some declining companies in an ETF as well, companies that are on a downtrend, and they're still in the S&P 500, for example. And also, it doesn't give you access to some of these smaller, high-growth companies in the US and in other places that you may want to select and you may want to have in your portfolio. But one of the good things about the S&P 500 and other indexes is if it has a bad year, for example, 1 year, it's very likely to then revert to the mean in the long term. So it is a safe investment. But if we look at some more active management types of investments, we have two types of other active management investment types. So we have hedge funds, so these large institutions. And I think the large institutions have a few advantages, but I actually think that they have more disadvantages. So one of the advantages that they have is they have more resources. So they have researchers, they have technology in which they can call upon. But I guess the big disadvantages, of which there are many, is that obviously there are high fees. And this means that not only do the hedge funds have to beat the S&P 500 or the NASDAQ or whatever's tracking it, they also have to outperform it, including the management fee as well. So this is very difficult. Also, institutional investors, they also have a lot of pressure from lots of the large companies that are investing in these funds. They also have liquidity issues as well. So they're not able to make investments in some of the smaller companies again, because it could potentially move the price. Yeah. So I think that's where the really innovative service of copy trading comes in, and the popular investor function. And I think the popular investor function has a lot of advantages. So there's a big pool of talent of popular investors to choose from. And you can choose a popular investor which fits your overall strategy and your risk tolerance. Yeah. Whereas in traditional hedge funds, it would be a lot more difficult to do that, to get someone that aligns with your overall belief. As popular investors as well, we can also invest in lots of different geographical regions. We can also dip into other asset classes, precious metals, stocks, bonds, crypto, whatever we want to invest in to try and improve those gains. So I guess in terms of the active management, the overall strategy is to beat the markets. So in order to beat the markets, you have to take a little bit more risk than the market, but then you also need to keep that under control as well. One of the things I wanted to say on the Popular Investor Program is I recently saw some statistics from eToro for the year 2020, in which they looked at the results of all of the popular investors in the Popular Investor Program, and they benchmarked those against the S&P 500 and the NASDAQ as well. Overall, if I take the overall mean of the results of the popular investors, the overall mean result was 43% gains for the year 2020, which was much and above the S&P 500, which was 16%. Obviously, it's a very small sample size, and I don't have a larger sample size of many different years. But I found that very interesting that most of the popular investors are beating the overall indexes. And one of the other things that I found really interesting as well was the fact that it actually broke them down into different tier levels of popular investors. And the highest performing popular investors were actually the Elite Pro investors. And what was actually very interesting was not only did they have the highest performance, but they also had the lowest risk scores out of all of the other categories. So not only were they outperforming the indices as a whole, but they were also keeping their risk scores at a low level as well. So I think the Popular Investor Program is a really good one. And I think that you can beat the market. But I guess one of the disadvantages is that you have to make sure that you select the right popular investor, make sure that they do not deviate from their strategy.
Can I just jump in a second there, Stephen? Just to be clear on what you were saying about that report. You say overall PIs averaged 43%. That's like in line, isn't it, with the NASDAQ for 2020? They beat the S&P and it was largely in line, whereas the top, the Black Stars and so on, beat the market more frequently.
Yes, that's correct. Yeah, it was, I think it was slightly below the NASDAQ, Gavin, but you've also got to take into account the fact that popular investors are invested in many different asset classes. So there are some with low risk scores who are investing, for example, in bonds or ETFs or Forex, for example, which would probably bring down that average as well. Saying that, also, I think it's not really that fair as well on the positive side to say it beat the S&P, because a lot of popular investors also have tech stocks within their portfolio as well. So I think really what's happening is the popular investors, because they're invested in lots of different asset classes, they're performing above the S&P 500, but then slightly below the NASDAQ because of the range of asset classes. So I think it'd be very difficult to beat the NASDAQ.
Yeah, well, there's a big problem with benchmarks for that very reason, because of the diversity of asset classes.
Sometimes when you compare the PIs with the benchmark, we have to take into account like what are their portfolios are actually concentrated on. Like most PIs at the moment, I think we can say that there is a 50-50 type of PIs. Like some PIs are actually more concentrated in the tech sector, and some PIs are actually more concentrated in the value stocks and have lesser technology sector. So we have to take into account what type of their portfolio to compare accordingly with the benchmark. So we can't really compare a value investor's performance with the NASDAQ, but a tech PI like Mariano Pardo that has around 50% in the tech sector, that's the person that you want to compare with the tech sector. Most of the PIs aim to outperform the S&P 500, but sometimes PIs that have their portfolio focused in tech sectors doesn't even outperform the NASDAQ. That's something that we copyists and any other copy traders might have to take into consideration when evaluating their performances.
It's interesting that a big deal was made out of 2020. I wonder, will the same focus be given to 2021's performance when all is said and done? That will be interesting to see.
Yes, I think it will be very interesting to see, and I think I think 2021 was a bit of a different year, although the indices are actually higher, and we're actually at all-time highs in the S&P 500 and NASDAQ. It's actually been a more challenging year for most popular investors. So I think you might see a lot of differences in the way that each popular investor manage their risks.
That's good. That's what we need to separate out the quality from people who just rode crazy 2020 with minimal skill. Isn't that right, Marco?
So what I would like to say is that I have a problem with people, well, but with not people, but with comparing your returns or the returns of specific PIs to the benchmark and saying that you beat the index, you beat the S&P 500 or you beat the Nasdaq. Like, what does it mean to beat the index? Most people look at the returns and say, okay, I have returns of 43%, the example that Steven was giving for the average PI return for 2020. S&P returns were 16% for 2020. So obviously, yeah, PIs had on average, a higher return for 2020 than the S&P 500. But that doesn't necessarily mean that they beat the S&P. When you go back and you look at the individual months and you look at the drawdowns, the S&P underwent a pretty substantial drawdown during the height of the corona pandemic, around 35%. That is a pretty severe drawdown. Now, of course, we look at it from the perspective of the end of the year, end of December. How has the year evolved? But if the year for some reason would have ended, end of March, just to put it into a hypothetical end of year, you would have seen a lot of investors, PIs also, with a pretty severe drawdown and a pretty severe or a pretty bad return for that year. So it is good, obviously, to look at the returns for each year, no doubt in that. But you have to look at the moves that it took to get you there. And if you have a return that is very high, but it took you a very deep drawdown to get you there, it needs to be risk adjusted. You cannot just look at, okay, it's this much percent. No, you have to look at it taking into account the struggles that it took you to get you there. And I think, I don't want to front run anything what I'm going to say later on, but I think the drawdown is a technical level that really is very much underlooked and underappreciated when it comes to comparing returns and comparing PIs.
Yeah, I agree with you, Marco. I think drawdowns are important. I think the main thing around the benchmarking is, like, so for example, I find it very difficult to benchmark my portfolio against something because it's mixed with lots of different asset classes. But I think the main thing about benchmarking is why it's important potentially for copy traders. I guess it's to do with expectations. So by putting a benchmark target up front, you are saying that your overall aim is to get to meet this particular benchmark. But that does become very difficult to do when you are dealing in multiple asset classes.
Yeah, so for me as a copy trader, my main goal is also to actually outperform the benchmark, because in my opinion, the best possible investment for me is to dollar cost average into the indices like the S&P 500 ETF, like VOO or SPY, or even you can buy the Nasdaq ETFs like QQQ. So my main ultimate goal in copy trading is to copy PIs that can potentially outperform the benchmark. So that is actually some expectation that copy traders should have, because when you come to copy trading, you should have a goal. You shouldn't be like just, let's say you set a goal of achieving 10 to 20% a year. But if in that particular year, the benchmarks are performing like 40 to 50%, then you aren't really that good when you actually compare to the best possible investment, in my opinion. So I think right now the issue in popular investors is we don't really have a very long track record. So I think the longest we can have is around 5 to 6 years. And we are in one of the largest bull market in the decade. We haven't really faced a major bear market like the 2008 financial crisis and the dot-com bubble in the year 2000. So if we have more data, like we can see the PI's performance back to 20 years, then we definitely can have a much better analysis to evaluate the PI's performance. But I would say that in 10 years from now, we'll have a lot of interesting stats, and we can see who's really the strongest PI that can last in the long term. Another 10 years, we'll have a lot of interesting stats. And from there, I think copiers can have much more options to choose as well.
Yeah, I agree, Brian. And I also think if, for example, as popular investors, we were to do risk-adjusted benchmarks, for example, and I'm talking to you as a copy trader, I think many copy traders wouldn't understand the relevance of a risk-adjusted benchmark. So you also have that slight difficulty as well.
Yes, it would be great to have answers in 10 years as to who's beating what benchmark, but copiers want answers now. And it's nice to have performance comparisons. But the other part of the question that we set up at the start was, why would you copy any PI or copy trade at all if you might not beat the market? So can we explore that a little bit, the reasons why it might still be a worthwhile endeavor?
Yes, we can, Gavin. I think that there are lots of other great elements to copying a popular investor. So one, I think, is the social and the learning element, in which I think many popular investors can bring a lot of value to copy traders. And I think a lot of copy traders have an interest in the stock market, but may have limited years of experience actually investing in stocks and other asset classes as well. So I think investing in a popular investor is a very good way to watch how they do and watch how they implement the strategy overall. A lot of popular investors also provide a lot of analysis about particular stocks or assets. A lot of popular investors are also doing videos in which they explain what's happening overall in the market and, providing some good education to copy traders, which will kind of help the long-term journey in investments. I think you also have the community part as well, I think is quite important. I think building a community where people feel like part of a group and they're sharing ideas with each other, and the whole social media aspect of eToro, I think, is very important as well for copy traders. Obviously, the aim is for the popular investors to provide you really good returns above and beyond what the benchmarks could do. But, there are also other elements at play if they fail to do so in a particular year.
Without the social aspect of copy trading, we might not even be here today discussing about these things. We might not even get in touch with each other. So throughout, I've been copy trading since January 2020. And since then, I've met a lot of very, very smart popular investors, copy traders, and all sorts of normal people that I can actually learn a lot of things from. So at the same time, it expands your network, and at the same time, it provides you a lot of additional learning opportunities. For a copy trader, there's a lot of value through it. That's what I mainly believe. And I'm actually quite grateful for eToro to create this copy trading feature because I'm really passionate about it.
Brian, do you find that it provides you encouragement as well? To be part of a copy community or being part of this popular investor program as a copy trader, do you find that the encouragement of the crowd of people that are in a similar position to you helps you in terms of motivation to continue with copy trading?
I think somehow it helps. Like if you have a community of like-minded people to achieve the same goal, it somehow encourages you to move towards that direction as well. But let's say for my case, I think most of the motivation come within my own desire to trying to outperform the markets. Yeah, so somehow I think the community also encourages me to work towards this goal.
I do agree with Steven in that active management is very important. A lot of people want to be invested in the markets. They want to participate, but a lot of them either don't have the not necessarily not the qualities, but just not the time to invest all the time in it. So copy trading is a very ideal solution for that. Of course, you need to make the right picks, choose the right copy traders, et cetera, et cetera. But it is much better to have your money under active management than just to have it in passive funds, because, and that's actually coming back on something that Steven said earlier, if you have, for example, a long-term investment in passive funds, it leaves you prone to the drawdowns as well, whilst active management can actually generate a better risk-adjusted return in that sense.
Yeah. The other thing that we shouldn't underestimate as well is the whole trust element of copy trading. So obviously, when you're investing in a hedge fund or you're investing in an ETF, it's totally faceless, right? So you're not interacting with anyone on a day-to-day basis. And I think for copy traders who are investing the hard-earned money that they've earned through working, I think it's nice for them to be able to see a face and have someone that they deal with them on a regular basis and that they feel they can trust. And I think that brings peace of mind.
Yeah, and just to add, investing in a hedge fund or a unit trust, that's what we call it in Malaysia, you have to pay the initial sales charge and also annual management fee, which is also a headache. And not only that, their performance is usually not that good when you compare to the S&P 500 as well.
This topic came up in the Copytraders Club Discord group, link in the show notes, where the very impressive machine learner and I had a bit of back and forth. His main thrust was that if communication is important to you, then yes, by all means. Otherwise, there's really little reason if you're not beating the market. And I thought of a few things to put to him, and I'll just run through those now at the moment. My first thoughts when this topic came up were ethical investing. You might not want to invest in everything in the market because you find many of them to be morally unsavory activities. So you consider your money to be a vote for the future you want to see. And therefore, when copy trading, you can back PIs that have that same focus. Industry-specific investing, kind of similar thing, but I saw on the newsfeed of Lizzy Apukaya, the Hungarian contrarian, a discussion of his investment in water companies. And a PI appeared there whose sole focus is investing in water, called Invest for Water, 4 being the number 4. So, and he's had a good start. So there could be people who want to take that approach, industry-specific investing. It may also satisfy a need for people to be more involved in their investments. We've kind of touched on that already, which may or may not be for educational purposes. I think maybe sometimes we overplay that. Most copiers aren't young, smart college guys like Brian who, want to know as much as possible and take on the world and compound for decades. I think that level of enthusiasm for education is probably not shared by the vast majority of copiers. But the big one that I think that is also downplayed and officially downplayed is it's fun. Right? Way more fun than buying an ETF, of course. Now, eToro and similar companies get accused of gamifying the terribly serious business of investing. But what if we just celebrate that for a moment? Because, there is something of the fantasy football about it. Picking your team and watching the drama unfold and the soap opera of all the different personalities, watching their performance, hearing them interviewed, seeing little scandals exposed, some of them going off the rails. You can just see friends meeting up for a beer and the chat turning to their copy trading experience more and more in the future, bigging up their favorite PIs and slagging off the worst ones. So yes, investing is serious and there's real money to be won and lost, but without being stupid about it, you can still have fun in the process, let's be honest. Let's not treat it as a guilty pleasure among us. A pleasure shouldn't be guilty. If you enjoy the fun of it, say it loud and proud.
Yes. Yeah, I think 2020 was also a year which was dominated by the coronavirus. So I think people being able to go on eToro and have fun whilst investing was probably much needed.
Well, nice to end that chat on a positive note, which buys us some credit, I hope, for the second topic of discussion, the potentially less than positive issue of the promotion of PIs on eToro, including editor's choice and PI performance notifications. Brian.
All right. So today we'll actually be focusing on how eToro promotes their PIs to community. So the two most common methods that eToro promotes their PI is via the editor's choice and the notifications. However, since the most recent update, the user interface has slightly changed a bit. But to be honest, I'm loving this new version and design. I'm not sure is this design still available in all countries over the world, but so far, I have the new design is actually available in Malaysia. We used to have this copy people section where you click on it and the editor's choice will be on the top of the page. With the recent update, it's slightly different as this copy people section is no longer available. The new design has a discover section and you'll see explore global markets. When you click on it, right underneath this, there will be a heading which is the copy top investors. There are a total of 8 PIs being featured and it seems to be favoring elite PIs at the moment. Mariano Pardo is the only elite pro appearing among the other 7 elite PIs. With the new design, PIs that are featured under the copy top investors section could be expected to gain more new copiers because they seem to attract the most eyeballs. Because right now this copy top investor is the only image that is appearing on the Discover too. But when I click into the copier graph of the featured PIs like Mariano, Camper Ones, and Olina, there isn't really a huge spike in the number of new copiers, which I'm actually quite surprised at. So if we click on the View All button, it will direct us to the previous user interface whereby the editor's choice is at the top of the page. So that's the topic that I'm trying to address today. So editor's choice is a place where eToro will choose to feature PIs with unique strategies or portfolios, basically somewhat that might interest the community. So I believe this is also a platform where copiers often like to go and choose a PI they want to copy trade. Hence, it usually gives the featured PIs a great boost in their AUM and copier numbers. If you look at the copier graph of each PI featured in the editor's choice, almost every single one of them have an exponential increase in copier numbers and AUM. So I think editor's choice is a good platform for newer PIs to reach out a larger audience, giving them an opportunity to shine in this already saturated pool of PIs. Because currently there are around 1,400 PIs, so it's not really easy for someone new to attract a copier's interest. Personally, I've never used this editor's choice to filter any PIs to copy trade because me as a copy trader, I have a preference of copying PIs with a track record of at least 3 years. But the editor's choice usually feature newer PIs with a shorter track record. So it doesn't really fit my personal criteria. Despite that, I still find it an interesting discover feature as I get to check out new rising PIs with interesting and unique portfolios. You don't know, maybe one of these PIs being featured in the editor's choice will be the next J Nemesis.
Before we get into specifics, can I just point out that, Brian, you and I had a chat with eToro the other day. I got in touch with eToro to tell them we were going to be talking about this, and they very kindly set up a call with Sam Rudnick and Emma and Joey. So a lot of the information we're talking about today is as a result of having discussed some of these matters with them. And the conversation took place in the context of there are other changes to be rolled out to how PIs are presented through the Discover tool. But it's still interesting to consider the thought processes that are going on behind the scenes and why eToro are picking the people they do and what their objectives are. Do you want to talk a little bit about what we learned about that from the phone call?
Okay, so basically, it was a good opportunity to actually have the chance to talk with people from eToro, especially with Sam, Joey, and Emma. So basically, the main objective of this editor's choice, the vision that eToro wants to present is they want to show the community what type of PIs that might actually interest the community. So they are providing a platform to feature PIs that, based on their specific algorithm and triggers, these types of PIs with unique portfolios can actually appeal to the copiers so that they can consider them as a new PI to copy trade. Usually PIs that are they are interesting to the community that usually get more clicks, because eToro will actually monitor their AUM flow, the number of copiers, and like how many people copy their portfolio in that amount of time. So based on these triggers and algorithms, they will actually the team will decide which PI will actually be promoted in the editor's choice. But of course, although most of the time editor's choice will actually bring a huge influx of copiers and an increase in number of AUM, that doesn't last forever actually. So after some clarification with Joey is the one that is managing the data, looking at all these data and numbers of the PI. So he can see that PIs, after being featured in the editor's choice, there are a lot of copiers coming in. There's a lot of money flowing in. But after 1 to 2 weeks, everything's gone. It flows back to their previous AUM before being featured in the editor's choice. PIs are still responsible to maintain their copiers. So they have to communicate well, engage well with their copier community, ensure their performance is good so that they can actually retain such copiers. So this editor's choice is a good platform to actually give PI a boost, but in the end, it still depends on their own responsibility.
I understand. And I think it's more the eToro editor's choice is, from at least what I have seen, something for rising stars. Maybe in the past they have promoted people with already a lot of AUM, but I also sense that lately the people that are being promoted are people who they perceive are going to be successful in the future, or people who they perceive at the moment could be successful. I myself was in the editor's choice last year in March, and I saw an enormous inflow of copiers during the time that I was on. And I agree with what Brian says, because it was enormous. And once the day comes that you are taken off of the editor's choice list, despite my return still being very good, you sense that it kind of stagnates. It kind of gives an enormous boost to your AUM. But of course, if you don't have the track record to show for it, eventually you're going to lose those copiers. I do like the editor's choice though, because I have seen a lot of people appear on it who I didn't know existed. I didn't know their profiles. And all of a sudden I'm like, oh, wow, yeah, I agree. This person who may or may not have a decent track record, or sorry, not a decent track record, but a long track record, has a lot of potential. And I do see that in a couple of years, we would say, oh, yeah, they have what it takes. So I think it's more of a early recognition tool to see people who are or have the potential to become stars in the future.
I consider the editor's choice, it's a bit like a performing enhancing supplement, right? So what I mean by that is it gives a good boost to the popular investor, especially when they're quite new and they're trying to build up the first copiers, etc. But I think at the end of the day, you can be put onto editor's choice, but I think overall your performance and the way that you communicate is going to be the most important. So if you don't fulfill those certain areas, then you're quite likely that your copier numbers are going to drop off quite quickly after the editor's choice. So it does help boost it, but for example, if it's like an Olympian, for example, you can take a perform enhancing supplement, but you've got to have the overall skill already in place to be successful.
I'm surprised the conversation is quite as positive so far about this subject as it is. I often like to wax lyrical about the meritocratic nature of eToro, how it's the copiers who vote with their money as to which PIs get and stay at the top. You know, you can have Oxford MBA, Heloise Grief up there alongside Jay Nemesis, who left school with 0 qualifications. And nobody cares. However, this page is, let's be honest, where the meritocracy is least evident, since there is a guiding hand behind how the choices are presented. And editor's choice is the most guided bit of that. You know, the search filters and the categorization by type are a little more automatic. But editor's choice is where eToro are saying, here, consider these people. And there's a lot of people to consider, and some will make it and many won't. So it is a bit of a controversial issue, let's be honest.
If you want to, as a copy trader, you don't just want to copy anyone that is presented to you via the editor's choice or the notification. So yes, they are featured by eToro due to maybe to certain positive reasons, like they have a good track record or performance. But as a copy trader, you still want to do your due diligence and research properly.
You do, Brian. You do. But as we said earlier, you're not the average copy trader. And if you're talking about the exponential growth, clearly lots and lots of copiers will take whatever's given to them.
Yeah, that's why this has to be reminded to all the copy traders around the world. So yeah, basically, you don't want to just copy them based on just because they are featured on the editor's choice. This is actually a mistake that should be avoided. And then we have to actually research and look carefully at the PI's background and all. Because eToro, this editor's choice actually, they will rotate the PIs on every other week based on market factors and also depending on the community's interests. So if no one is interested, then they will somehow rotate off the PI and bring in another potential PI that the community might be interested to copy in. So yeah, for all the copiers out there, I think we have to put in more effort and research as well.
You also have to look at it from the perspective of eToro. Of course, they're going to put forward the people who they believe are going to be attracting AUM. Of course, it's a delicate subject because you cannot just put forward people. You have to really trust what they're going to do, because a lot of the people in the editor's choice are beginners. Well, beginners, more or less. I'm saying beginners. They still have a track record, obviously. Otherwise, you wouldn't make it to editor's choice. It's a delicate subject because you have to know that those people are not going to all of a sudden take an enormous amount of risk, and then you have promoted them and then they're going to take risk. Yeah, you can take them off, but they were promoted just as much. So obviously there is a little editor's choice in particular is more from the perspective, who do we think is going to attract the most AUM? And of course, a lot of people, Brian says, you still have to do your own searching. You still have to do your own investigation on who to copy. But for a lot of people, they don't have the time. They want to know immediately, I want to copy somebody. Who is it going to be? I don't want to scroll through lists. I don't want to do search criteria. So eToro proposes you 8 people or 10 people. I don't know the exact amount. Let's see through those 8 who I want to copy. So it's a lot of PR as well, of course, from eToro's perspective. And for me, it's just a tool to see who is out there that I haven't discovered yet that I can follow. But I understand, yeah, for a lot of people, it's the only list they will eventually go through to see whom they can copy.
You touch on another interesting nuance there, Marco. eToro is a business, and there are narratives that they want to accentuate and narratives they want to do what they can to limit. So they want to showcase some sort of serious, sensible options because they want to be seen as a serious, sensible investing platform, right? You know, they want to limit any allegations that this is the Wild West. So they're not going to put short-term YOLO characters that they don't feel they know very well or they can't trust. So they set the parameters and they decide who gets in. And when such a system exists, there'll always be those who think it unfair, that they're being overlooked. And sometimes those parameters may exclude those who are not intended to be excluded. But it's impossible to please everyone. As Emma from eToro said on the phone call, they know eToro's not perfect. Nothing in life is perfect. And this feature, like eToro itself, can't possibly be perfect with so many disparate stakeholders all thinking their needs must be met. But can we talk about that a little bit, Stephen? You haven't been on Editor's Choice. Does that irritate you?
It doesn't irritate me because I think if we actually look at it, so I've never been on Editor's Choice or appeared in any notifications, for example, but I know that eToro has very strict perimeters. And one of the parameters is the fact that you can't make more than, I think 95% is the maximum you're allowed to make percentage per year before you're taken off the filters and you're not applicable for Editor's Choice. And the last 2 years, I've been above the 95% amount of gains. And obviously, I'm not going to change my strategy in order to fit in around the eToro parameters. So I understand that they have it in place for a certain reason. You know, of course, I would like to be there. I think it would help my overall journey. And I think that there are some kind of gray areas that you probably need to consider outside of these parameters as well, because there are special cases. And I think as long as people are fitting in fairly well with the risk, then I think it's good. I think the other thing you have to think about as well, Gavin, is if you did have Editor's Choice and you did have people with very high amounts of yearly gains, it's probably more likely that the copiers, because they're new to eToro, for example, are more likely to copy the person with the highest gain rather than looking at all the different eToro investors. So I do kind of understand it from eToro's point of view, but I do think I think as long as you're acting responsibly with your portfolio and they can see that, I think that there's some gray areas.
Well, I'm sure people from eToro will be listening to this right now and thinking, oh, Bees84, let's have another look at him. Brian, go ahead.
Okay, so yeah, like what B says, one of the limitations is also if a PI achieves more than 95% gain, then they will be automatically removed from these filters like the editor choice or notifications or even the under the most copied, but I'm not too sure about that. So Sam Rudnick actually clarified this is quite a similar reason from what you mentioned, because he mentioned that he doesn't want copiers to have that expectation that if I copy this PI, I'm going to get 100% return in the next 12 months or what. So if they set this expectation, if they, let's say they promote a PI with 100% gain in the last 12 months, so copiers might think that if I copy, I can get such good results. And if they don't get those results in the next, let's say, few months, then they might end up stopping the copy, losing money, and maybe blame eToro for their suggestions and things like that. So, but it somehow also punishes the PI for achieving good performances. Yeah, so that's something that maybe needs to be taken into consideration. Maybe a better way to do is, although those PIs achieve 95% or 100% return and above, they should actually look at their risk-reward ratio, like what's the risk and the drawdown they've taken to actually achieve such returns. Like, I think the Sharpe ratio and Sortino ratio could be a useful guidance for this. So maybe they could reconsider this promoting 100% returns. I'm not too sure, but in the end, it's still up to their choice lah.
Yeah, I had no idea, by the way, that the 95% rule on the editor's choice. It's a little bit shocking because that would mean if Steven, for example, were to have kept his returns for last year or this year below a certain level and basically would have stopped trading altogether, he would have made it to editor's choice. Yet if now that he continued his trading, he doesn't. So that doesn't seem right, because obviously those are very high returns, and I understand in a way the viewpoint from eToro, but it's almost like, okay, his returns are 110%. We're not going to promote him. Person B's returns are 75%. Let's just promote him. There's something illogical about that, because for all eToro knows, Steven is the best trader in the world, and he's now being pushed down. I mean, he's being pushed down because of it, and that doesn't seem right.
I was going to say as well. I mean, in terms of the editor's choice, does have some excellent benefits in terms of growing quicker. But I think also there's something to be said about organic growth as well. So I think the more that you can do to reach out to your community and build it, I think it's still possible to do it without editor's choice. And I think I managed to grow up my copiers in the end of 2020 and beginning of 2021 to quite a good level without being on editor's choice and without having notifications. And one thing I've noticed is that it's actually been fairly constant. It grew to a certain level and the copier numbers haven't dropped off. And even in June and July, when there was a little bit of a dip in some people's portfolios, and there was also a dip in crypto as well, I didn't actually lose a lot of copiers. So I think the people that spend a lot of time, as Brian was saying, to actually search out the PIs that align with their strategy are much likely to stay with them longer.
Yeah, ultimately my view is that the main weakness isn't eToro's doing, really. The problem isn't the PIs they choose or the mechanism by which they choose them. I think the main problem is the quality of copier that's going to use editor's choice. The quality is on the low side, and therefore they're unlikely to be sticky, as we mentioned earlier. If they're quick to jump into bed with the first PI they're introduced to, then they're also likely to scarper at the first sign of trouble and probably run back to editor's choice, and try again, and then repeat to fade. And as Brian mentioned, eToro said they did see that sort of pattern repeating. So, on the other hand, if a copier finds a PI based on a more measured, educated approach and takes time to get to know the PI's history and style and method and personality, there's a far better chance of a long-term relationship working out. I think that's what we're saying. It's a bit like the world of romance. Advice from an old man to a young man, Brian. Don't go chasing them. Let them come to you. You feel me?
Yeah, correct, Gavin. I totally agree with I agree with that as well. So if we actually have the right expectations and what are the clear outcome that we want to achieve as a copy trader, it's not too difficult to find out which type of PI you want to copy trade. And in the end, these types of PI will be the ones that will be able to give you the good satisfaction in the long term and to deliver the desired results that you want.
I was just going to say, I think that they should consider both, for the editor's choice, they should consider both qualitative and quantitative data in terms of the popular investor. For example, you could have a particular sector that's been booming and you could produce a decent result, but you could be really underperforming when you compared to the sector that you're actually invested in, for example. And you could be put in editor's choice because you're below a certain threshold in the parameters, but it doesn't necessarily mean that it's the right person to put in. And maybe someone who has performed better in that particular sector or that particular stock or asset class may be punished for it because the returns are higher.
Yeah, in the end, I think returns are what matters. And if you make it to editor's choice, it may give a temporary boost to your AUM. It may give a temporary boost to your copiers. But what ultimately matters is your performance. And if you can grow organically, might take a bit longer to get there, but you will still get there because your performance will make you get there.
Can we then just draw the same conclusions when it comes to notifications that people receive about PI performance? Is it Do all the same things apply, Brian, as to editor's choice?
Okay, so previously I was also curious, like what are the different type of criteria for the PIs to be eligible to be promoted in the editor's choice or the notification? I couldn't see the difference in the criteria required. Then thankfully, after talking to Sam, I got an answer which is for the notifications is slightly different than the editor's choice. So notifications is more based on milestones. So usually most of the notifications you can see this PI accumulated a gain of 100% over the past 4 years. This PI had an average performance of 36% over the last 8 years. So in notifications, they tend to promote PIs that have longer track record. I can say so because from what I see in the editor's choices, most that have 1 to 2 years of track record. It's slightly different, but I think the rule still applies the same. When you want to choose a PI to copy trade, you still have to do your due diligence and research carefully to see whether they can meet your long-term expectations and what are the outcomes you want to achieve in the long term, whether they appear in the notifications or appear in the editor's choice. But I think notifications are easier to be noticed because I, as a copy trader, I don't always go to the editor's choice to take a scroll and see who's on the list this week. Maybe I do that once or twice a month, not too often, but I check all my notifications. So yeah, I think notifications sometimes could give a better boost to the PI as well, but still have to apply the same rules as a copy trader, which is don't just take what you are suggested. You have to do your own due diligence.
I believe as well, Brian, that those notifications, if I understand correctly, I think they are automated. So I don't think it's the popular investor team actually making the decision, let's put this person on the notification. I think it's triggered on certain milestones. But again, I'm not sure, but they may have a filtering process, so it doesn't include everyone. But I'm not 100% sure on that.
I don't think it's unmanaged. I do think they make their picks on it. Of course, they would have a list of people that would be generated by the system that have met a certain criteria, have met a certain milestone, but they would still go through that list and see, okay, this one is the person. A little bit the same as with editor's choice. This is the person whom we can promote in a specific way.
Yes, my main problem with it is the specific way in which they phrase the promotion. There was an incident that occurred quite recently, and I won't mention the PI because he seems like he's reasonably good, but the notification came through and they benchmarked him against the S&P, and they used wording that confused me a little. At first glance, I thought they were saying he had beaten the S&P year upon year over a number of years. It wasn't that, actually, when I thought about it a bit more.
Who you are talking about, Gavin.
Okay. So what they were really saying was that over the 7-year period, he has done better than the S&P. So I thought, oh, silly me. And then I checked his portfolio and his performance, and that may be mathematically accurate, but what you've always got to do, as Rule 4 of Copytraders Club tells you, beware the PI who's quoting annualized returns or lifetime returns. If you can check back and see that he made his money via a different method that is currently going to be available to copiers. And indeed, this guy made hundreds of % in 2017, presumably from crypto. So if you have to beware of the PI who's making representations against benchmarks that have no bearing on what he's selling, that's one thing. But for eToro to do it is a bit of a worry.
I think they need to be careful of in terms of the wording, because obviously we know on eToro platform there's a lot of new beginner investors who would have had exactly that same thought, that he had beaten the S&P 500 every year for X number of years that were on that notification. So yeah, I do think they have to be quite careful of the information that they lay out.
Yeah, one thing I noticed eToro like to promote through the notification is the number of green months. Like this PI achieved 12 consecutive green months. This PI achieved 2 consecutive years of green months, which this is one of the things I really don't like because it sets an expectation to the copier that achieving consecutive green months is a good result and is something good for the long term. So green months is nothing if in the end the annual returns is not outperforming the benchmark and all.
Yeah, that is a strange one because, we all know that the obsession with or being seduced by lots of green is a very unsophisticated way of looking at things. And eToro is in the business of educating people. So, why reinforce that myth?
Yeah, instead, if they restructure the sentence, let's say this PI match the S&P's performance with lower risk, that is actually even a much better sentence that this PI achieved 12 consecutive green months. I think that's even a prouder statement.
The other notification that I see quite regularly as well is somebody reaching copy milestones like 1,500 copiers or 2,000 copiers. And sometimes I wonder if this is relevant for the copy trader.
Dear listener, just a little pause here to say a few things directly to you. The calendar is full until the end of the year. That will mean 52 episodes, which seems like a good time to pause and call it Season 1 and take stock. It's been a lot of fun and a lot of time and effort, but I'm pleased to be creating something of value for eToro users, particularly copy traders. Whether there will be a Season 2 depends on a number of factors. I say it elsewhere, but I want to repeat it again here to really encourage a little action from you. If you want to see the podcast continue, you can help by bringing more listeners in. A lot of people still don't know about Copytraders Club, so post about it on your PI's feed in eToro. Mention it on a Facebook group or in whatever Discord groups you're in. That's not too much of an ask, is it? On the podcast apps, there's always a share function that includes copy link. Use that. Or copy the YouTube channel link and share that. Or share a link to your favorite episode. There are many ways to eat an orange. I also have one of those affiliate links for new eToro signups in every episode's show notes. So, if you know someone interested in signing up, please copy and send them that link and help support the show that way. Now, I know these calls to action that you hear on podcasts can easily be ignored, and I always ignore them myself, let's be honest. But this time, I am asking you, as someone who listens to and enjoys this one-person independent podcast, to make a little effort to help it along. You can even press pause and take 2 minutes to do it right now. If you do, know that I am grateful. If you don't, every time you hear this bit, you will be overcome with a crippling sense of guilt and unworthiness. Until you do. Back to the show. So that was all the discussion we had there on the editor's choice and notifications. We understand there are many changes on the way, so it'll be interesting to see how that all develops. That's about the long and short of it, which brings us neatly on to topic number 3, considering the long term versus the short term. As we've mentioned on this episode, copiers have a tendency towards short-term action. So rather than shake our heads and tut in disapproval, let's consider the plight of the short-term copier. Listener, if you too are a short-termer and you still haven't found what you're looking for, maybe Marco can help. Marco.
Okay, So basically, you have two types of traders. On the one hand, you have the long-term investor who, as it says in the term, invests for the long term, doesn't necessarily do a large amount of trades. He will basically accumulate a portfolio of either stocks or ETFs or commodities or whatever he or she wants to invest in. And on the other hand, you have short-term traders who go in and out of positions relatively quickly and who make money from those position switches. Now, it isn't that black and white. A lot of times you will have people that are kind of in the middle who both will have a specific set of products for the long term and will do certain trades or will do certain trimming of positions or enlarging positions frequently in the middle. Now, I have sensed that a lot of copy traders are actually searching for short-term copy opportunities. For example, me myself, I'm a short-term trader. I usually don't stay longer than 1 week in a specific position. I will go to cash or back to cash very frequently. Sometimes I will even do day trades where I will enter in a trade on a specific day, and before the day has ended, I will have exited that position. And that gives actually an opportunity for copy traders because since I am so frequently into cash, if a copy trader were to copy me at that specific moment, he wouldn't suffer from synchronization issues that certain long-term investors would have for their copiers.
And you're a volatility trader.
Yes.
What other types of PIs are there out there that have a similar time frame to you? Are we talking currency? Are we talking Forex guys? Commodity guys?
Yeah, I think Forex traders are the most common on the platform. I have approximately 10 to 15 people in my lists that I track that are actually pure Forex traders who also do short-term trades. Of course, short-term trades is not necessarily pinned on Forex or any specific product. It can be anything. You can be a short-term trader on commodities. You can be a short-term trader on equities, on anything, basically. So it basically means that using a predefined set of rules, you go in and out of your positions. Now, like I said, it's not often that black and white. For me, it's very specific. I don't do any long-term investments. I purely focus on the short term. And here's where eToro is a little bit difficult to get my name out, because if you go to the eToro lists of people that they promote, very rarely will you see people there who are short-term traders. It will, for example, if you go to the list of the Discover people, all of their subcategories are basically focused on investors. And I'm not saying investors are bad or anything like that. Of course not. You need long-term investors, but you also, in my opinion, need short-term traders. The mixture is actually ideal. You need to, as a copy trader, find a little bit of a perfect mixture to set up your copy trading. On the one hand, you have long-term investors. You may have certain Forex traders that you put in, volatility traders, commodity traders, even though I don't know any specific commodity traders on the platform. That's like a very dark area that I don't. They might be there, but the thing is, how do you discover them? Because they're not being promoted and they're not even appearing in the lists.
Well, that's part of the subject that we're talking about, is how do copiers find them?
Exactly. Yeah. So I wish that there was a certain category that eToro promotes of short-term trading. Just like now they have, long-short investors. That is one of their subcategories on their page. Why not have a category short-term traders or traders altogether? Doesn't need to be short-term. You can even have traders that have a little bit longer time frame. But I think a lot of copy traders also want that opportunity to have a quick and easy way of getting in and out of a trader without too much hassle. And for me, for example, I have sometimes people who contact me and say, hey, is this a good opportunity to start copying you? Hey, should I copy open trades? And in all honesty, I go to cash very frequently. So if you see that I'm in cash, there's basically no question. You can start copying me at that particular moment without any hassle, without having to worry about the spread that you're going to pay on the positions that I have open, etc. So it does provide opportunity as well for potential copiers.
It would be good to have that in place as well, because it would allow copy traders to have some diversification in their portfolio. So if they have a lot of people whose performance is roughly tracking the S&P or roughly tracking the NASDAQ, it could be quite good for copy traders to have the option of taking someone that might be a volatility trader, someone that's involved in Forex, and potentially doing short-term trades, which shouldn't correlate too much with the rest of their portfolio. So I think it's a good idea.
As a copy trader myself, I personally actually prefer shorter average holding time, which is short-term traders, because synchronization is actually so important in copy trading. If you don't synchronize well, you are not getting the results that you are actually expecting. So short-term traders, in a sense, can provide this such opportunity for the copy traders, because you are, most of the time, you are in sync. So that's one of the reasons J Nemesis. I believe that's also one of the reasons J Nemesis is gaining so much attention, because he's a short-term trader, and at the same time he's consistently delivering good communication and results in the last few years. So I think newly even PIs like Paulo Gabriel that I'm actually copying right now, he's also a short-term trader, and that's one of the reasons I copy him, because in my portfolio, I want to have a balance of a few short-term traders and long-term investors.
There's an irony, isn't there, that some of the conversations I've been having off eToro with people who are long-term investors include them saying that they don't think it's for them because the platform encourages short-termism and the copiers all want short-term returns and short-term action. And therefore, a lot of the PIs who might be long-term investors are put in this position where they're recycling positions and they're trimming and they're doing all this activity to meet the demands of the system. Yet the system isn't making it easy for real, automatically short-term traders to be discovered very easily. Is everyone confused by that point? Marco looks confused.
No, I think, I mean, when you say short-termism, I mean, there's a difference between having a short-term trade and expecting to gain, 50% in 5 days. You can have short-termism in a organized way where you would just have, risk-adjusted returns that are not extraordinary or whatever. I think a lot of people are expecting, hey, I'm going to copy this person. I'm expecting astronomical returns for a very short time, but that is not necessarily what short-term trading means. There's a mixture there. Short-term trading, I mean, the returns need to be adjusted for the risk that you're going to take. Obviously, that's the bottom line. Yeah.
Yeah. So I do both short-term positions and long-term positions. So probably in quite a good place to kind of comment on this. And I think it totally makes sense in terms of the short-term positions. It's a lot easier to sync with copiers overall. But I think in terms of the investors that are long-term, I still think you can make it work very well for copy traders, as long as every now and then you look at your positions, and it might be important that you close those positions. And if you're still really bullish on those positions, you can reopen them again and make sure that they're synced with copiers. But I think, okay, it is a part of the system that we need to consider, but I don't think that the eToro platform is just good for short-term traders. I think it can work with both, but it does require some action from the popular investor.
Yeah. So like last time I used to copy EliteVol as well in my copy trading portfolio to act as a hedging strategy, because I made a mistake in the first quarter of 2020. So during that first quarter, during February, I was only copying one PI with my entire bankroll. So that time I was copying Yepe. Pickard bond. So he was very correlated to the stock market. And when the COVID-19 crash came in March, my portfolio took a big hit. So if that time I was thinking, if I were to have a few more different PIs that have different strategies, that adopt hedging strategies, I can actually prevent such losses. So before the US election, I actually talked to Marco and asked him whether is it a good time to copy him, because usually based on the historical volatility trends of the VIX, usually the VIX have a large movement prior and after the US election. So I talked to Marco, and during that time, I copied him to actually prepare my portfolio for it as well. Regarding promotion of short-term traders, you know that actually right now there's one female PI. Her name is Catalina Norena with the username WixGo. She's in the editor's choice and she's a PI from Belgium. And the strategy is also focusing on the Wix ETF. And I'm not sure, Marco, whether you know her or not. So she is actually trading the Wix ETF and also the SPX ETF that is correlated to the Wix and the 3 times S&P ETF. So she is also somehow managing a short-term trading strategy that tries to take advantage of the volatility. So I think eToro is somehow promoting such traders as well. They are giving opportunities to this type of traders to reach out to the copiers.
Yeah, so there are indeed a couple of volatility traders on the platform. I actually didn't know that she. I've been tracking her for a while. I didn't know she made it to editor's choice, which is great. That is actually a great great news.
Yeah, just to add on another thing about short-term trading, I think if you hold it for like days or weeks, then it's acceptable. But you can't hold it like lesser than 24 hours, which is known as scalping, because previously there are such issues like an elite popular investor. His name is Hashmish. I'm not sure you guys are familiar with. So Hashmish actually was quite popular during that time. He was gaining a lot of copiers, and at a certain period of time, he got involved in these scalping trades, which is very profitable until at the end, eToro warned him and decided that you can't do this anymore. But he made a mistake of continuously repeating this mistake. And in the end, he got banned from the popular investor program. So last year, another trader also did similar. If not mistaken, it was Miyoshi. So Miyoshi last time also got involved in this scalping strategy. So if I track back his previous track records, he was actually using like around 60 to 70% of his portfolio to scalp ETFs, like the index ETFs. So he'll just go in for 4 to 5 minutes, especially when the markets open, just to take advantage of the gapping up or the gapping down.
Yeah, and of course that scalping, I'm also not a fan of scalping because, of course, if you are scalping in the way that you say, you are actually using some misquotes that are maybe linked to the platform itself, and then you're really treading dangerous grounds. There is a very big difference between scalping and other ways of short-term trading, where I still think that short-term trading can be a very valid alternative to long-term investing. But I am in no way promoting scalping because that is that is very different, and I do not promote it at all. Yeah. Since I'm a short-term trader, I will, on occasion, enter in positions that are, in fact, a relatively large amount of my portfolio, and that will have a relatively large amount in a single position or chopped up into smaller positions, but in the same product. So as a result, I have learned that eToro gives me a quite a high risk score. Now, that the problem is that eToro calculates this risk based on what you have in your portfolio. And since I have, of course, a relatively large amount in that specific product, I get a high risk score. But what eToro doesn't know is that I may end that position very quickly, and I will have a tight stop loss, for example, set on that position, planning to leave it maybe even that day, maybe in a couple days. So how they perceive it as, they calculate risk as they see what you have in your portfolio. They calculate the volatility that that specific product or that set of products has shown over the past, I think it's 1 year time frame. And they said, they then look at it, okay, if you hold this in your portfolio, how volatile is your portfolio going to be, assuming it will be a long-term investment? But that's not what I'm doing. I'm not holding this for the long term. I'm holding this as a short-term investment. Sorry, a short-term trade. So I think that short-term traders get a higher risk score than what they should be getting. First of all, because of the fact that they don't keep these products for very long. And second of all, because we may actually, if you as a copy trader insert us into your selection of PIs, we may actually lower your risk in your portfolio because we may provide diversification and provide you with risk-adjusted gains during periods when the market is showing volatility. Of course, I'm talking now specifically about my subsection, but I'm pretty sure that other short-term traders experience the same thing. Like if you're a short-term Forex trader, I can also assume you're getting a pretty high risk score, even though you will exit most of your positions, maybe even before the trading day is over or in a short amount of time. I understand how eToro calculates. I mean, I understand their perception of risk. They want a unified number that applies to everyone. But sadly, yeah, it's difficult to do that because there are so many subcategories. There are so many types of traders. It's difficult to assign one number, boof, you're number 6, and like that will be your stamp and that defines you. That's difficult, yeah.
I also think it's important to kind of differentiate between short-term and long-term traders, because I think a lot of people, especially when they're new to investing, they look at long-term investors and then sometimes they think, well, they're not doing anything. You know, they have these stocks in their portfolio which they're seeing for the long term, but obviously there's a lot of research and a lot of things that go into stock selection as a whole. So I think it's quite important that copy traders distinguish that short-term traders are actually specializing in short-term trading, whereas long-term traders are kind of looking at more of the fundamentals of a business and how it can grow over time. So there's no real point in going in with the short-term mentality when you're looking at a long-term trader. So you need to differentiate, especially when you're copying different popular investors with different strategies, that you don't treat them all the same.
Right, well, that seems like a good place to leave it. And if there's no further business, that just about does it for this Total eToro episode. We've some great guests coming up over the next little while, but it's with a tear in my eye that the curtain has to fall on this one. So step up one by one and acknowledge the virtual and silent standing ovation you're getting. Marco Willekens, thanks.
Thank you very much, Gavin. Thanks for having me.
And I'm very grateful for the BJ being here today. Bryan Jee, thank you.
Thank you very much, Gavin. It was a pleasure talking to both PIs that I actually like as well.
And of course, thanks to the Singapore Sting, Steven Budgen.
Thank you very much for having me on the show, and it's been great chatting with you all.
But above all, thanks to you, listener, for listening and supporting the show. That's all from me. You can continue the conversation on Discord and Facebook. If you like this podcast and want to see it continue, you can do your part by recommending it to one person or group of people this week. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., and so forth.